Okay, good afternoon. Um, Welcome to today's edition of the Indices Market Mastery. Yes. For those of us who are here, I think we have a good number already. I wanted to request for some minutes for others to join us, but since we have I'm sure that by the time we're done now, we'll have up to 20 persons. So, see no reason why we should not continue. Okay, so for those of us that are here with us, I think in the morning we had some sessions. We had the MMR. I was here during the MMR. We looked at some instruments, and we established the fact that we did not have so much high impact news until much later today. So we were expecting the one for 130, which is unemployment claims. Let me share my screen so that we can look at that. Okay, yes. So I believe you can see my chart, Forex Factory. So the only high impact data we had before what we were expecting, was for AUD much later. That's quite early, around 1 a.m. But by 1:30, which is in 23 minutes time or thereabout, we'll be having unemployment claims. This one comes out every week, so comes out every week. And among the high impact data, is I would say one of the least, among high impact data is one of these because it comes out every week. But it's still capable of giving some volatility, and you never know. So unemployment claim, just to explain once again, when you're looking at unemployment claim, or when you're talking about unemployment claim, you're talking about the number of persons, especially in the US, they have a program whereby if you're available, you're ready, you're willing to work, and you do not have a job, that's an unemployed person, they have systems for which they care for such people. You understand? So that's they have those systems like that. You understand? So every week people apply for that, and with that they get the number of persons that register or apply for unemployment benefits. Okay, and with that number they can tell what the level of unemployment is in an economy. Okay, so it's not it's the good thing about it is that it helps to tell what the level of unemployment is. And of course, if the level of unemployment is high, that shows that the economy is weak. Okay. If the economy if the unemployment data is low, that means that there's a level of strength in the economy. You understand? So that is why today what we're expecting is around 210,000 from previous of 209,000. So we are likely expecting that there likely be an increase in the unemployment data. Okay, so if the unemployment data comes out and there's actually an increase in that data, it's very possible that it will weaken the dollar. And the dollar is currently at a resistance point, and so I will not be surprised if by the time this data comes out, it actually weakens the data more. You'll notice that, you see, from this zone here, price has rejected quite a bit and has actually fallen. And then we'll see that US 100 also, which we talked about in the morning, after falling all the way down, was able to, be rejected at this place and has pushed back up within its verified resistance also, heading back down just like this, So maybe that data will give it the momentum that it needs to actually break above this point, you see. But the dollar index, has fallen, but also can be seen to be resting on a support, waiting for that data. Okay, why is this a support? Very simple. If you check this place, price was rejected here. If you follow it down here, there was price rejection here also. So where where the dollar index is right now is actually on a support. So on a support. So the fact that it's on a support means that the market is actually waiting for this unemployment data to decide what it will do. If data comes out and it is bad, that means the unemployment is higher. Okay, dollar may likely fall further. Okay, but if the unemployment data is lower, then dollar may actually push up from this support to go back and at least test this particular zone here. So that said, we will wait, we will watch out to see how unemployment data actually comes out. Okay, so let's move on from there. Today we said to look into to continue what we talked about yesterday. We started with the Fibonacci. We actually plan to continue that today. Please just a minute. Okay, so yesterday we tried to draw the Fibonacci. Okay, so we tried to draw the Fibonacci. We drew it on our system. We also drew it on our phone to show you how to apply the Fibonacci on your chart. Okay, we also talked about the fact that there are different zones in the Fibonacci, and these zones can be used to determine what we call retracement zones. Okay, these zones can be used to determine where you enter your market to follow a trend, or where you enter a market to trade a retracement of a trend, depending on how you use it. Okay, so I'm just trying to do this to create a kind of what the teachers call it now, an introduction or a recap of what we talked about yesterday. Okay, so that's what we're looking at. We can use it, and they said when you're drawing your Fibonacci, now your Fibonacci itself, Fibonacci can be very subjective. It's subjective. It depends on what you are considering. There is no perfect way to draw a Fibonacci, because a Fibonacci is about connecting the high to the low of whatever trend you are looking at. Okay, whatever trend you are looking at, Fibonacci is all about connecting the high to the low of that trend. You understand? So that's all about. So if you say that price pushes up like this, okay, price pushes up and comes down and pushes up, I can use the Fibonacci to calculate from this place here to this point here to understand what levels are in between this zone. You understand? I can use my Fibonacci to calculate from this place here to this place. So most times we always use our Fibonacci. We draw a Fibonacci by connecting the highest point on the chart or the place we are looking at to the lowest point. Okay, so we'll try to connect it from the highest point to the lowest point. Okay, now you're also told that when you're calculating Fibonacci, you also want to first understand the trend of the market. The trend of the market is very important. And we said yesterday that if you want to get the trend of the market, it's better you check it out on 4 hours or the daily time frame. To get a proper sense of the retrace of the trend of the market, it's better to check on 4 hours or on daily time. You can see that on 4 hours here, if you look at the dollar index, you can see that this particular dollar index is on an uptrend on 4 hours, right? It's on an uptrend. right? It may be hard to tell that when you are on 1 hour. This is 1 hour now that I'm showing you. But if I want to understand the trend of this market, I'll check, say, on 4 hours. And on 4 hours, I can tell that this is an uptrend, right? Good. So if I'm drawing my Fibonacci most times, I want to draw my, say for instance, I'm drawing my Fibonacci on 1 hour. Okay, on 1 hour, I want to tell what the level of retracement has been, to know if I should continue that uptrend or to know if I should continue selling. Okay, I'm going to draw the Fibonacci very soon, but I just want to establish some ground rules. Okay. So if you are, because this morning, even yesterday, someone was talking about how that entry points are very important, and we agree that that's very true. In fact, today we're also talking about how that if you are using, if you are trading and price is on an uptrend, we said that if price is on an uptrend, the best position to take is a buy, right? But we said another important thing is where to place your buy. Do you understand? Where do I place my buy? Okay, so that is how it works. That is how the, because yes, price is on an uptrend and I want to buy, but where do I place my buy? And we said the best place you want to place your buy, right? The best place you want to place your buy is from your support. You understand? We said the best place is from your support. You can place your buy because that price is on an uptrend and you want to take advantage of the buy, right? Good. So looking at dollar index here, just a kind of recap. We established that the trend is what is an uptrend, right? Good. So if it's on an uptrend, we will draw our Fibonacci from the low point to the high point. So on this uptrend now the point is I can decide to draw it from here to here. Somebody else may decide to want to take a larger chunk of the market to draw it from maybe say from here to this point here. So this is what I mean. Look at, can draw it from this low point. I shrunk my chart so that we can actually see a huge chunk of the market. So I can draw it from here to this point here. I've drawn my Fibonacci from this down point here to this point here. Okay, so that's one way of drawing the Fibonacci. Okay, now another person could decide that instead of considering this long part like this, he wants to draw his Fibonacci. Let me zoom in now a bit. Good. Say, okay, I'm going to draw my Fibonacci from this zone here, from this place here up to this place here. A more recent high, a more recent low. You understand? So that's why I want to let you know that Fibonacci itself is subjective. And when these instruments like this are subjective, it means what subjective means is that there is no particular way to actually go about it. Okay, people apply the Fibonacci differently depending on how they want to use it. Okay, now when something is like that, it means that that kind of thing is not adequate for you to use alone. It means it's important that you should be able to merge that with something else. You understand? So that's what it means, that you need to be able to measure with something else. Because if you check right now, if you check the Fibonacci right now, on its own, because of the fact that it is subjective, it's better for me to adjust it, or it's better for me to merge it with something else, so that I can use it as a confirmation. And that is why we said that Fibonacci, RSI, and all the likes, they work best when you combine combine them with candlestick pattern, when you combine them with support and resistance. You understand? So now this particular one that I've drawn, what does this mean? What does it mean? Now it means that you will notice that on my chart, like as you are like this, the black lines, that are there, they show different levels of retracement. The black lines I have on my chart, those horizontal lines I have on my chart, they show different levels of retracement. Okay, so if you start from if you start from down there, you have what? 100%. What does that mean? It means that if price comes all this way down, price has done 100% retracement of this high here. Remember that because this market was on an uptrend, we took it from low, we drew it from low to high. Okay, because this market is on an uptrend, we drew the Fibonacci from the low part to the up part. Now, what does that mean? It means that if this market sells all the way to this place, this market has made a full 100% recovery of this high point here. Okay, it also means that if price, in the case where price is going up to this place and it gets to this place, that means zero, that's completed everything. Okay, so this zone like this and this zone, people also refer to it as overbought and oversold, you know, maybe not really. I don't advise you to look at that, but yeah, it's looked like that, and of course, it's expected. It's expected that if price gets to this 100%, you expect it to retrace. If it gets to this 0%, you expect it to retrace, you know. Now, after this 100%, we have 61.8, we have 50%, we have 38.2, we have 23.6. All these are mathematical zones. Okay, all these are mathematical zones. There are zones where price can be rejected. Okay, there are zones where mathematically it's expected that price will likely be rejected. Okay, so you can use them as support and resistance. That's what it means. You can use these places as support and resistance. So for instance, you will notice that where I have my 61.8% Fibonacci is around where I have my verified support. You will notice that where I have this my 50% Fibonacci is a place where price was rejected here, a place where price was rejected here. Where I have my 38.2 is a place where price has actually also been rejected in the past. And it's also around the place where I said it's looking like a current support to the dollar index. Which is it. Then this place too, this 23.6, you can see that it's also a place where price has been rejected in the past and all that. So these are actually zones of support and resistance in the market. And this is quite simply how we draw the Fibonacci. This is quite simply how we draw the Fibonacci. If price is on an uptrend, if you have looked at it on 4 hours, you have looked at it on 1 hour, and you have established that the market is on an uptrend, and whatever you're looking at, especially on the 1 hour, you want to draw your Fibonacci from down to up. From the low you are considering to the high you are considering. Now, if that market is on a downtrend, if the market is on a downtrend, it means that you have to draw your Fibonacci from up to down. You understand? So now let's move from here. I hope we all understand this aspect before we go into how to use the Fibonacci. I hope we all get this aspect, please. Please, I'm expecting feedback. Are there questions regarding this aspect? Okay, very good. Let's look at this. Don't understand, just join, kindly recap. Okay, very good. So this is what we are going to do. We'll not really be able to recap this. I thought I was doing a before, but no, this is what we're going to do. I want them to understand if people got it. So we had this session yesterday. You understand? This introductory session of how to draw a Fibonacci. We had it yesterday. And by the special grace of God, we're able to, it was a live stream just like this one. So it is still very much available on YouTube. Okay, so I'm going to drop the YouTube link for us to actually go through it. Okay. So what we are going to really work on now is how to apply this to trading. I'm sure that by the time by the time I even start to talk about how to apply this to trading, we'll begin to get it. I'm sure we'll begin to get it. You understand? I'm sure we'll begin to get it. Okay. So let's just continue. Let's just continue. Yes, you can change the line to any color of your choice, especially when you're using the system, because we tried to do that with the phone. We find out that with the phone, for what I saw, it's just this diagonal line. Except this was this diagonal line I could change, not the horizontal line. Don't worry, I'll show you how. The YouTube link will be sent. It will be sent. Okay, so to do that, just right click, just double click here on this horizontal line. On the horizontal line, double click, then right click. Once you right click, you will see Fibo properties. Select it. Under Fibo properties, you can see the color here. You see it. You can see style black. Then if you want to I think this is under Fibo levels. These Fibo levels are this 23.6, 38.2, 50, 61.8 and all that. It is already marked as black. But if you go to common, you have the style to be red, and that red is this diagonal line. So I can change the color of the diagonal line under common, and I can change the color of the horizontal line, okay, of the retracement line. Here I can change it here under Fibo levels. So this is it. Under common, I can change the diagonal line. Under Fibo levels, I can change the horizontal lines. Okay, so let's continue. Let's continue. So how do we use the Fibonacci? How do we work with the Fibonacci? How do we use it in trading? Number one way we use this Fibonacci in trading is for support and resistance, especially when for those persons who do not have support and resistance, especially when you're doing analysis and you're using your phone to do the analysis, because a lot of people usually ask and say, hey, what's going on? I don't have support and resistance. I need support and resistance. I always use my phone, so I don't have support and resistance. I don't have a system, so I don't have support and resistance. You can use your Fibonacci to determine the support and the resistance. Because all these lines that I hear like this, all these lines that I hear, they are price rejection points. They are points where the market has been rejected in the past. Okay, so that means that we can adequately use them as support and resistance. Can use them as support and resistance. Let's check Forex Factory. I think it's 130. Let's check Forex Factory. Okay, so we have 20 seconds for unemployment data. Let's see if it is something that we can take advantage of. If not, continue the class. There will be a lot of opportunities when the US session opens. Okay, pending. What do we have? Okay, so I think this is good for the dollar. We have it around 198,000, which is, um, a reduction, in unemployment rates, right? So let's look at how the market is responding to that. Oh, okay. And dollar seems to be finding a bit of strength, but right now it's now pushing down. Look at US 100. Dollar is pushing down. Let's see. Well, if the dollar can break below this 38.2, then we'll watch and we'll see what it does. But like I said, this is not, you see that it's not a data that among the high impact data, it's one of the weakest data. Among high impact data, it's one of the weakest data because it comes up every week. So market is still ranging around the point. We don't still have any clear vision. Then those people who use the EMA strategy, I believe that there are people who use the EMA strategy who are already on a buy on US 100. Who use the EMA, not because of the fundamental, but just because of the fact that we had 2 consecutive bullish moves above. I hope there are people who were already on a buy on US 100. Well, let's continue. So like I said, unemployment claims is a high impact data, but seems like one of the weakest of the high impacts because it comes out every week. So I'm sure that we'll be able to get very, very clear opportunity to trade when the US session opens. Okay, so let us continue with our Fibonacci. What instrument were we using? I think dollar index, right? Yes, we're using dollar index. Okay, so here we are. As I was saying, for those people, I said one of the first ways we use Fibonacci is for support and resistance. Okay, I'll give us a clearer chart so that we look at it. This is Euro USD. Oh, Euro USD hits our buy stop in the morning. I'll buy stop and take profit in the morning. Okay, so this is Euro USD. And as you look at Euro USD like this, let's look at the trend of the market. Let's not even use my normal support and resistance template. Let's use a normal plain template. So with this, we can check on 4 hours to see what the trend is looking like, right? Look at the trend. What trend is this? You can tell that this particular trend is like a downtrend, right? It's like a downtrend. You can see how we've been having lower lows like that. We're having lower lows, and after this one, low, right? And it seems like Euro USD is trying to push back some strength, but right now, as it stands now like this, Euro USD is on a seat. It's on a downtrend. Okay, it's on a downtrend. Although it's beginning to push an uptrend from here like this. If you mark this place, you see that Euro USD is already beginning to make a couple of higher lows. It's already beginning to make a couple of higher lows. Okay, so and that's how we normally tell what a trend is. We use higher high and we use higher lows. That's an uptrend. Higher highs, higher lows. Okay, so let's try and draw the Fibonacci now. Let's try and draw the Fibonacci on Euro USD and let's see how it helps us to tell support and resistance. Okay, let's draw it. Let's see how it helps us to tell support and resistance. Okay, good. So what do we do when we're drawing our Fibonacci? Because it's on a downtrend, we draw a Fibonacci from up to down, from the high point to the to the low point. Look at it, from the high point to the low point. Now, currently, what does it tell us about Euro USD? It tells us that right now, around where Euro USD is, there is a resistance there. There's a resistance where Euro USD is. This 61.8 is like a resistance. This is 1.8 is like a resistance. So if I apply this even on my phone, I can easily tell, these lines can help me tell where the resistance is. You understand? So yes, this is a resistance. And it means that there might likely be people looking out for a sell on Euro on Euro USD from here. Likely people looking out for a sell on Euro USD from that place here, from this place here. So, and you can see how it's still likely, it's still pushing Euro USD down. So Fibonacci is also used as support and resistance. Look at another example here, the 38.2, this place here, 38.2. Look at how it's rejected price here. You know, rejected price here also. You understand? So it is serving as a support here. Even this one, to look at this one, serving as a support also. Fibonacci helps you to, Fibonacci serves as support and resistance when you are in the market or when you are trading. You can use Fibonacci as support and resistance. Okay, we're going to even look at other instruments. Let's look at, since it's an index class, let's look at US 30. Good. So this is US 30. On US 30, let's check the daily time frame. Look at US 100. US 100 looked like a push up, but US 100 has begun a downtrend. Remember when we were doing trend, we said that when a particular market can give you consecutive lower lows, at least 3 consecutive lower lows, there's no support. Okay, let me remove. Okay, I wanted to show you guys something, but we'll get here. Now, 3 consecutive lower. Look at the first one. 1, 2, 3. 3 consecutive lower low. That means that US 30 is already pushing a downtrend to us. It's pushing a downtrend to us. So what I want to do is, someone says it's not seeing resistance. I don't know. You're not supposed to see resistance. We're talking about Fibonacci. But what I'm saying is this. You have here, you have 2, you have 3, right? Good. So we want to now draw want to draw the Fibonacci line. Remember, the price is on a downtrend. So we're going to draw it from our high point to our, it's on a downtrend. So we'll draw it from the high point to the low point, right? We'll draw it from the high point to the low point. So let's say, for instance, we are drawing it from here to here. Okay, so that means we'll do it like this. We'll draw from here to here. Exactly. So we'll draw from this place here to this place. You have done that. Now remember, it's on a downtrend. That means that it's possible that if US 100 or US 30, if US 30 buys to this place here, if US 30 buys to 33,930, this 33,930 is 61.8. From this place here, I can look out for a sell on US 30. From this place here, which is like and the truth is, one of the strongest retracement areas is like the 61.8. You understand? So if price gets to this place, I could look out for a sell from here. You understand? So this is an example. Look at this 61.8. Look at it, 50%. This place is 50%. 38.2% is next, and then 23.6. All these percentage points are support and resistance points. Okay, support and resistance points. Okay, so I'm trying to go through PC friend. PC friend is saying why. Why? I don't know what you, why what? Yes, because we are looking for lower lows. It's a sell trend. The market is on a downtrend, right? It's on a downtrend. So that's why we are looking for lower lows. Because the market is on a downtrend, we are looking out for taking a sell, at the top. The market is on a downtrend, so we are looking out for taking a sell at the top. Market is on a downtrend, so we are looking out for taking a sell at the top. If market is on an uptrend, the best place to look out for the buy is what? At the bottom. If market is on an uptrend, the place to look out for a buy is from the support. If market is falling down, the best place to look out for a sell is at resistance. Okay, so yes. Thank you. So just like I said, price pushes to this place, we might likely look out for what? For a fall from here. Okay, so I've shown us how we can use did I draw from? Wait, let's do it again. Let's do it again. Oh, thank you so much. Let's check it out. You know, this market is on a downtrend, so we're supposed to draw it from up to down, actually. So let's be sure that we did just that. Oh, I think I actually drew it from down to up. Okay. Yes. Yes. So, currently, Seth, with the way I've drawn it, with the way I've done it, thank you so much. Thank you so much for showing us this. Look at this, guys. Remember, I said that if the market is on a downtrend, you draw it from up to down, right? Good. Now, someone has shown us, I actually drew it wrongly the first time. I'm supposed to draw this one now because this market is on a downtrend, draw it from up to down. You will notice that right now, right now, the best position I want to take on US30 right now is a sell. Right now, like this, the best position you likely want to take on US30 is a sell. Even if you're selling US30 right now and your stop loss is maybe, in case for those people who use stop loss, you want to set your stop loss around 33860. 33860. But if you sell US30 now, you likely make some profit from it. Why? Because US30 has already hit this 23.6 point here. This is like its own resistance point here. You understand? It has hit the resistance. So if somebody scalp a sell here, somebody trades a sell here, you can make profit and come out with profit. You can see that even around this place here, you have a bearish engulfing candle. A bearish engulfing candle. So if you sell US30 here, you can make profit. Yes, let me see. That's Adewuyi, thank you so much. Thank you. You understand? So even that, you see that 33930 I told you guys about, it's also a 38.2 zone also that you can also have a sell limit around. This is US30. Okay. You understand? So that's what we're talking about. The fact that Fibonacci can also be used simply, especially for those people who do not have the access to say, oh, my phone, no support and resistance. Fibonacci can be used plainly as support and resistance. Okay, but I've also explained to you that these instruments like Fibonacci, RSI, support and resistance, what else? Bollinger Bands. All these instruments are instruments that, at the end of the day, it's always good when you have or when you combine them with candlestick pattern. You understand? And then somebody asked, what if he breaks it? Of course, if he breaks it, he's headed for the next zone here, right? If he breaks this place, of course, he's headed for your 38.2. If he breaks the 23.6 Fibonacci level, he's headed for the 38.2. It will likely range with that place, be rejected and all that. If it breaks that place, just like support and resistance works. Remember that if price is at a resistance, if price gets to a resistance, two things can happen. It's either it can break that resistance and continue up to the next resistance, or it's not strong enough to break it and it goes back down. You understand? So that is how Fibonacci retracement works. These are retracement levels, okay, that you can actually use when trading Fibonacci. Okay, and you always get a better result when you now. Out of all these, let me also state something. Out of all these, the strongest what would I call it? The strongest retracement zone. The strongest retracement zone, guys. Note that the strongest retracement zone in your Fibonacci sequence, especially in your retracement like this, is the 61.8. The 61.8 is like the strongest zone that you can have. Okay, the 61.8 is like the strongest zone that you can have. Okay, now why is it 61.8? If we go and check, you'll find out that most times you always get a very good retracement zone or continuation back to the trend around this 50% or the 61.8, around here or around here. You understand? Around here or around here. When you draw your Fibonacci line, most times your 61.8 is a very fine place for you to trade a retracement, or for you to trade price to return back to the trend. Let's look at US 100 for instance. Let's look at US 100. So this is US 100. US 100 has made an uptrend, right? But it has also done something. If you check on the daily time frame, you have a high here. You have another high here. This high is lower than this, right? And you have another high. It has given us 3 consecutive lower highs. 3 consecutive lower highs. And what does that mean? That means that there's a high chance that US 100 is likely what? On a downtrend that has begun to actually fall down. You understand? It has begun to fall down. Now, what does that mean? If it's on a downtrend, that means that if we go to my 1 hour now, let me give us a clearer chart. Let me give us a clearer chart. Give us a clearer chart. In fact, without any support and resistance. Please just give me a minute. I'm trying to fix something. Okay, so let's continue. If so, we discovered downtrend, right? So we want to draw our Fibonacci. Okay, remember that Fibonacci, you're drawing Fibonacci, you're looking at high, you're looking at low, and of course it's subjective, you know, depending on what high or what low, what high or what low you're actually considering, right? So let's draw. Now if you look at my 1 hour right now, this is my high and this is my low point, right? So let's look at that. Let's draw our Fibonacci. Remember that we're looking at a downtrend, so that means you're drawing it from up, right? From up to down, right? From up to down. Good. Now this is it. Now if we look at US 100 here, right? If you look at US 100 here, we can see that currently US 100 is trading above my 50%. Trading above my 50%. If this candle, it's not a matter of pending on. If this candle closes above here, if this candle can break, remember, whenever I talk or whenever I advise regarding price breaking resistance or price breaking support or all that, you know, it's always about price closing. Okay, I always advise that you cannot say price has broken a resistance, you cannot say price has broken a support if price has not closed above that place or closed below that place. The reason I say that is because many times where people actually believe or expect that price has done something that it has not done. You understand? And that is where people suffer from when you have things like shadows, like all these shadows like this. You know, that is where people actually suffer from. So if price breaks this 50%, for instance, what that means that if the body of the candle closes above this place, price is likely headed towards this. Now, you see this 61.8 zone. This is 1.8 zone is a place where there's likely going to be what? Retracement for price to continue the trend. So for instance, if I wanted to set a sell limit, for US 100, I'll be looking at a sell limit around here, around this zone here. Now let us mark that zone. Let's mark that 61.8 zone. Okay, I'm now going to apply support and resistance, normal support and resistance to my chart. I'm going to apply support and resistance. I've marked that zone with a blue line, right? Good. Mark that zone. I mark that place with my blue line. So let's check. Where is my blue line? This is my blue line here, right? Good. So we have a weak resistance just around here. Just around here like this, we have a weak resistance, okay? Which shows that the whole of this zone, okay, the whole of this zone is a good place to actually look out for price returning back to that downtrend. You understand? And for the person asking how to install the Fibonacci on your phone, it's actually there on your phone already. It's there on your phone already. Just what you will do is still what we talked about yesterday. We talked about how to locate it on the phone. So remember, I promise that at the end of this class, when I'm going to try and drop the link to that particular session. So I'm going to drop it for us. You understand? So, but what I'm trying to say is that if we continue to follow this our blue line down, you will see that there's a high chance that it is a strong point that price has been rejected in the past. You understand? You will see that it's a zone where price has been rejected in the past. Around here, look at it, around here, like that. You know, hey, I'm going too fast. But what I'm trying to let you know is that all these things are things to look out for. Now, remember I told you that when you're trading, wait for the candle to close. For instance, this is what I'm talking. It does not mean that this market cannot break above this place, but you need to wait for the candle to close to decide whether price has broken your Fibonacci level or not. You understand? That's the idea. Okay, because US100 has given us a sell trend, the best positions you want to take are sell positions from resistance points, and good resistance points are like your 61.8 points, you know, your verified resistance and all that. So personally, I will be looking out for a sell on US100. Even if it buys to around 15,200, I'll be looking out for a sell from there. And I'll be expecting that from there, price is likely coming back towards this verified support and will likely break this verified support to give us a lower low. You understand? So I'm going to still take another example again. Let's look at US 500. Now, remember I said, drawing, especially when it comes to, I try to repeat these things from time to time so that anybody who's coming can hear what I'm saying. When you're drawing your Fibonacci line, Fibonacci trend line, they are subjective. They all depend on what particular aspect or what particular time frame you are looking at, what particular zone you are looking out for. You understand? So that's why I always say it is good that you accompany it with candlestick patterns, which we have talked about. It's good you accompany it with support and resistance. It's good you accompany it with price action. They are not to be used just on their own. You understand? Just on their own. So, for instance, those places where I say, oh, look at this particular sell, I'm expecting this sell to happen. I want to see like a candlestick pattern. I want to see like an inverted hammer, a hammer, an engulfing pattern around there to be able to confirm before I take a trade around those zones. Do you understand? I actually used US30. I'll show us now. Let me use US 500. I use US30 first now. I use US30 first. So US 500 also giving us the same thing here like this. So let's on 1 hour now. If I want to draw my Fibonacci, and it does not have to be on 1 hour. It depends on what you're working with. You understand? It doesn't have to be on 1 hour. So let's look at Fibonacci. If I'm drawing my Fibonacci, this is my high point here. My low point is down here. You'll notice that. Let me. This is my high point and this is my low point here, right? My high point, my low point, right? Good. Some people always even do it between one verified resistance and another verified support. So they like to draw it between a verified, but it's good to look at from your high point, your low point, okay? So let's say, where's my high point? From here, right? Good. So I draw it from here. Remember downtrend, so I'm drawing it from up to down. Drawing it from up to down. Okay, so like this, right? I've drawn it. So what I have done is I have created retracement zones. Yes, now, yes, I've answered this question. If it breaks, it's going to the next place now, just like support and resistance. If it breaks, you are taking a sell at the resistance. The breaking that resistance does now means that, okay, you're closing your sell and now taking a buy. Normally, when price at a resistance, especially a strong resistance, especially on a downtrend, you're taking a sell, right? But if price breaks a resistance, there's a high chance that it's headed for the next resistance. That's normal support and resistance that everybody understands. So you can always, the person talking about the cursor being tiny, you can always increase the size. We talked about it yesterday also. You can find that on YouTube. You can increase the size to be maybe something thicker. Like if I come to this diagonal line now, this red diagonal line, or for those using system, if I double click on it, it will form to give a box. So once I right click, I can go to Fibo properties. And at Fibo properties, I can check colors. Okay, I can check the color. Apart from that, I can check the thickness of the line. I can change the thickness of the line. You understand? If I go to common, I can also change the color. I can also change the thickness of the line. So maybe that's what you need to do to change the thickness of those lines. You can do that even on your phone. Okay, so yeah, we're talking about US 500. Now we've drawn our line here to show retracement points or rejection points, or as the case may be. You understand? In this case, there's a verified resistance up here. So let me just adjust this up to this verified resistance. Very good. Good. So around here now, price seems to be dancing around this 50 period here. Okay. Price seems to be dancing around this 50 period. Okay. So the next major resistance for price is what? This 61.8 zone here. If price gets to this 61.8 zone, for instance, so you can look out for an immediate sell, or the best result you can get from this place is, a candlestick pattern that forms around here. Remember I said Fibonacci gives you better results when you combine it with something. You understand? So if price gets to this my 61.8, for instance, and I'm watching it, and around here it gives me an inverted hammer, or it gives me 3 dark horses, or it gives me a bearish engulfing candlestick, and it confirms it from here, from that place, I can actually begin to look out for a sell. You understand? I can already begin to look out for a sell. You understand? So that's all they are. As I explain this thing, I see some questions that, please kindly take us on the given percentages and on the lines and the implication to trade decisions. That's all we've been talking about. So that's all we've been talking about, that these percentages are retracement points. They are support and resistance points. They are places where prices can likely retrace back. Right? That's what they are. So maybe what you need to do is, maybe you joined late. So maybe what you need to do, because thank God this class is actually live streamed. So what will likely happen is, after this class, you can go check it out, watch the video again, you understand more. So as I was saying that all these are zones, they are retracement zones. Okay, they are retracement zones. And we consider that this 61.8, because when price has gotten to 50%, the thing about a trend is that a trend will continue to give you, I think I should draw now. Try and just explain this thing, because when you look at a trend, normally when you consider a trend, you say an uptrend. An uptrend will be going to give you high, or to come down, not come down too much, give you a higher high, come down, give you another higher high, like that, right? Good. So the Fibonacci retracement is just calculating the retracement between those trends and telling you that there are certain zones where mathematically it has been proven that around those zones price will retrace backwards. Fibonacci is a mathematical tool that was brought into trading. You understand? So that is where these zones actually formed from. Okay, and that is why we have 0%, we have 23.6%, we have 38.2%, we have 50%, we have 61.8%, we have 100%. In fact, we also have, they can actually continue beyond that, beyond 100%, but we always advise to stop at the 100%. Now, all these zones, first of all, just understand that these zones are normal support and resistance zones. And so what that means is that when price gets there, price will likely be rejected at that point, or price will likely break that point and go for the next point. The 100% and the 0%, I mentioned earlier that they are always seen as overbought or oversold zones. The 100% and the 0%, they are always seen as overbought and oversold zones. Remember when we're talking of overbought and oversold with the RSI, we said that overbought and oversold does not mean price will not, for instance, if price is overbought, it doesn't really mean that price cannot continue buying, but it just means that it's a place that you have to be careful with entering a further buy. It's a place where you should be looking out for a candlestick pattern or price action to let you know that price is about to start falling back down. Price is about to start retracing. That is what these zones tell you. That is what this particular point tell you. You understand? Good. So Fibonacci is, like I said, very subjective because it works with trend, and trend itself can change. Trend itself can be long distance trend can be short distance, trend can be intermediate. You understand? So what I want you to understand from this is that Fibonacci may not be a very perfect perfect strategy if you are not combining it with price action. Okay, for instance, let me give you a good example. Look at this US 500. Around this 50% here, we're supposed to get what? A retracement. So for instance, around this 50%, I can actually look out for a sell. Okay, but you can see that somehow price has been able to close above, has been able to break above this resistance. So I've not gotten a price action to confirm. Yes, I got a bearish engulfing pattern here, right? So I was supposed to get a confirmation, meaning the next candle was supposed to close bearish to confirm this engulfing, and then I take a sell. Okay, so when you get patterns, when you're using Fibonacci, okay, still make sure that you combine it with candlestick pattern. Still make sure that you combine it with price action to get better results. You understand? Make sure you combine it with price action to get better results. If you're not ready to combine it with price action, you're not ready to combine it with this, it's better that you just focus on other strategies. Because trust me, you're trading Fibonacci retracement, it is very much dependent on price action for you to know when to say go. Leonardo Fibonacci, exactly. Okay, so let's it's past 2. So what we are going to do now is we're going to start taking entries towards the US session. We're going to start taking entries. We'll try and use the Fibonacci to see if the Fibonacci can give us clear signals. Remember, when we started this session, I always told us, I said, if you have a strategy you're using now, why we are taking different strategies like this is for educational purposes. For the few times we have been talking, you know that because I want to be as realistic as possible. You are not going to use all the strategy we teach you at once. It will not work for you to combine everything we teach you at once. Why we do this is because for you to get to get education about this business. Now, it's also true that it's also possible that the more strategies you come across, you get to a point where you decide for yourself that this one works better for me. Okay, and so that is why we continue to roll out different strategies and continue to show you different indicators and all that. Not just because you have to combine everything on your chart. okay? But just because you need to have the knowledge of them, practice with them, and see whether it's something that suits you. Do you understand? And that is why I also said that if you have a particular strategy that suits you, the truth is that that particular strategy may not be able to give you trades to take every time. So you need to be able to stick with your strategy. If it is not giving you a position to take, it's not giving you a position to take, you can stay off. That's because Mr. Ogiche is not giving you the same point, because if you check, we're likely not drawing it from the same zone I'm drawing. You know, if you're using your phone now, your phone cannot show you. This is, my laptop is showing me from 6th of October to 19th of October. You understand? So with your phone, you may not be covering a whole lot of space as I'm covering. You understand? You may not be drawing it from the same zone as I'm drawing it. Because if you're drawing it from the same zone, the same price range, you should get the same thing. Okay, so I have said, if you're using a strategy, if that strategy has not given you a go, don't enter. The truth is, just as you get better, as you continue to use different strategies, okay, as you continue to use different strategies, all that, you get to a point where you feel, oh, this strategy is not working here, but I can use this strategy here. You understand? So I hope that helped. So let's go into what we should expect. US, this is the dollar index. The dollar index is still pushing, still showing signs of weakness. So it's very possible that let me give us a clearer chart. Good. So this dollar index still giving us some pullback in the market. Unemployment claims came out. It was fine. Unemployment claims came out and was fine. But currently the market is still reacting a bit bearish to the dollar. You understand? So as it stands like this, let's go into the world of US100. So you see that US100 seems to have closed above my 50% Fibonacci and seems to have closed above that resistance, which is what means that there is still room for it to actually push further up, right? So using Fibonacci, you can see that it has closed above my 50%. It has closed above, so there is still room for US100 to continue its bullish move, right? That's what Fibonacci tells us. Right, good. So let's look at it on a smaller time frame so that we can see what position we can take to take profits today. If this is a verified resistance and it has settled above this, then I advise that we still look out for a buy on US100. Okay, if you're trading US100, I advise that you look out for a buy on US100. Okay, I advise that you look out for a buy on US100. Let's see. Personally, my own general outlook for US100 is still this downtrend. You understand? Personally, my outlook for US100 is a downtrend, but right now on 1 hour, we see that there's still a lot of bullish pressure in the market. So let's see where the closest where we can take our buy stop, and take profit. Okay, shrink this a bit. Okay, good. So we have this fall, we have this lower, first low we have here, second low we have here, higher, we have this low here, we have a higher low here, right? So if I were to take a sell stop in this market, I will be taking it here. But right now, US100 is actually bullish, guys. I think we can make profit from some level of buys right now in the market, though. The way this guy is pushing up even before 230, I think we can take advantage of a buy that is going on US100 right now. Can take advantage of a buy right now. So you can take a buy right now, like can take a buy in the market right now on US100. Can take a buy right now on US100. Okay, good. I would even advise you, if you're taking a buy, your take profit is around take profit on a buy on US100. Let's have that take profit around 15,130. 15,130. Okay, you're buying US100 right now, take profit around 15,130. Okay, buying US100 right now, take profit around 15,130. Okay, then for your sell limit on US 100, sell limit on US 100, sell limit on US 100, apart from the sell stop that I'm also going to give. So we're looking at an instant buy on US 100 right now, looking at taking advantage of a buy on US 100 right now, take profit at around 15,130. 15,130. And then we have a resistance up ahead. We have a resistance up ahead, which I feel can take advantage of a sell limit from there. Or even not a sell limit, like once price gets to this place here, once price gets to, or if price gets to 15,230, 15,230. If it gets to 15,230, we might likely be looking out for US 100 returning back to the trend. Okay, looking at US 100 returning back to the trend. Okay, here, and then we could have your sell. You could have your sell stop on US 100. Sell stop at 15,015. 15,015. Sell stop at 15,015. Take profit at that's 15,015.70. 15,015.70. Take profit at around 14,960. 14,960. 14,960. Okay, yeah, that would be my own advice. Okay, my own advice. That'll be my own advice. Okay, someone just the thing with stop loss is this. For me, that's why I rarely give stops too. I rarely even give buy stops and all that and take profit. The thing with stop loss is that stop loss for me is a function of your trading capital. You understand? If I'm trading US 100, for instance, and I want to use stop loss. If you use stop loss so much on US 100, instrument like US 100, DE30 and all that, you will even find out that most of your trades will even hit losses before recovering. You understand? So the major what will I call it? The major insurance you have against loss when trading indices is actually volume. I will not. That's just the truth. The truth is that your trading indices, your major insurance against trading indices is good volume. Because when you have trades that don't go in your favor, US 100, DE30, these are trades that if you are aware in early enough, you can take the opposite direction and quickly recover because of the fact that they give a lot of profit per pip. You understand? But if you're trading US 100 like that and you're very, about the stop loss, but let me give stop loss. Let me give stop loss. So what did we say? We said that for US 100, we're looking at current buy, take profit around 15,130, right? Good. So if you're looking at for stop loss, your stop loss can be around your stop loss can be around 15,040. Your stop loss can be around 50 for the buy you're currently on. Okay, the stop loss can be around 15,040. Stop loss can be around 15,040. It also means that, of course, you don't really have to depend on the take profit. Okay, the take profit I gave was around 15,130, right? Good. But the cocoa is to be in profit. So yeah, that's the stop loss for that buy that I gave. Okay, then the sell stop, I gave sell stop at 15,015 and take profit at 14,960. You understand? 14,960. So please, for PC friend, I would really advise you, if you're a lover of indices, if you love to trade indices, just get the strategy right and just trade with good volume. Trust me, stop loss is very good. Like, I'm not going to lie to you, it's very good, but when you're trading in this market, you have a better insurance with good volume than even stop loss, especially when you're trading on smaller time frames like this. If you're so focused on stop loss and putting it so close to your entry, that you just find out that most of your trades are just hitting that stop loss. before returning back to profit. You understand? So it's mostly trades that you are not there to monitor. Trades that you are not available to monitor, which I will not even advise you to trade indices if you are not available to monitor it. If you're not available to monitor trades like that, then yes, you can put stop loss. That will be very wise. That will be very wise. Insurance. What I mean by insurance, stop loss is like an insurance, like insuring you against losing everything. What I'm just saying is that okay, another word for better insurance I mean is that you get better results with more volume than when you trade with less volume and you're depending on stop loss. Like, that's what I mean. Okay, so yeah, we are on US 100 buy, right? We're on US 100 buy already. If you're in profit, please, you have tried. Okay, let's move on to other instrument. I really wasted time on this thing. We've not looked at instrument at all. I'm going to stay off comments, okay, so that I can just attempt to this. We've only done US 100. That's a low score even for me. Even for me, that's a low score. Okay, so US 30. This is US 30. US 30 is still on that particular resistance where that 23.6, that 23.6 zone, US 30 is actually still there. But the truth is that if you check the candlestick pattern of US 30, we still expect actually that, okay, good. See the resistance that US 30 is currently battling with is here. And you notice that it's not the first time. Was rejected here, was rejected here, was rejected here, was rejected here, right? So there is a resistance there. Okay, so if we're going to be trading US 30, especially with the beautiful bullish momentum that it is showing, my buy stop for US 30 will be above that zone there. That's where my buy stop will be. Okay, it will be above that zone there. Take profit around here. While my sell stop will be below this low here. Below this low, my take profit will be at this zone here. So for US 30, I think for US 30 can actually give pending orders. For US 30, can have our buy stop at 33864. 33864. Take profit at 33914. 33864. Take profit at 33914. And then I can have my sell stop at 33734. 33734. 34. Take profit at 33693. Take profit at 33693. 33734. Take profit at 33693. You understand? Hey, please, back to this US 100. This US 100, I remember something. Let me add this 50 period moving average. Oh, okay, guys. Now this is US 100 on 1 hour, right? US 100 on 1 hour, and the 50 period moving average is just here like this. It's here, bagam. It's here, bagam. You know what we are going to do, guys? Because in the morning when we are doing this trade on US 100, I told us to look out for the 50 period moving average, right? So better late than, I don't know how they say that in English. Better late than, we are going to reanalyze US 100, please. We're going to reanalyze it because with the resistance that it has, or with that 50 period moving average that it has on 1 hour, it's very possible that from that is even the spot where US 100 would likely begin to fall from. Okay, it's very possible that that is the spot where US 100 will likely begin to fall from. So please, this is my advice to us. I really wish that anytime I come to this class, people tell me that, oh, it's fine. We're already using the 50 period moving average to trade like you trained us, but I see a lot of us who I know us. We have always here. We have been here when I took that class. And but once requesting, the person that is dropping US 2000, I don't really know what you need. Like, I know this person. I know that this is somebody who already understands the 50-period moving average. Because from that 50, if we're using the trading with the 50-period moving average, even on 15 minutes, we'll actually be on this buy early enough and we'll be out of profit. We'll be out in profit already since he gave us 2 consecutive bullish candles from which we pushed off. But please, with that buy on US 100, anybody who is currently on a buy on US 100, I said to take an instant buy. If you're on a buy on US 100 right now, yes, it could go well. It could go well. But because of what we're seeing on 1 hour, I would advise that wherever you are on that buy like that, just pack it. Just close that buy. If you're on the buy on US 100 now, just close that buy. We need to watch the performance of US 100 against this 50-period moving average. So please, what I'm going to ask you to leave on US 100 is the sell stop I gave you at 15,015. Take profit at 14,960. That buy, just hold on to that buy. Hold on to that buy. Let's continue on another instrument. I'm still going to analyze US 100 before we leave this meeting. Okay, so leave that, only your sell stop at 15,015. Okay, take profit at 14,960. See that your buy. Okay, just hold on it. I agree. It's possible that buy will continue to this place. It's possible, but I cannot see US 100 here like this. The same 50-period moving average that has been rejecting it. Cannot see it here like this, and I'll now say you should buy here. So just hold on that buy. Only that your sell stop at 15,015.70, take profit at 14,960. Okay. So let me continue now. I was saying something about US 30. I gave us US 30 buy stop at 33,864. Take profit at 33,914, right? And then I gave us a sell stop at 33,734. Take profit at 33,693, right? Good. Let's look at US 500. Stachika, that's exactly what I said. I know you know that's what I said to close, but it's your choice. You can leave it. Does not mean that I don't want a situation whereby market begins to move now, it goes in profit. You say we should close that loss. You can make decision to leave it, you can make decision to close it. Do you understand? That one's your decision. Now, I noticed a 50-period moving average here, and I feel like it's not safe to have a position there. But if you're considering the loss and you still expect that to push up, you can leave it. You understand? Okay, so US 500. What do we have here? We have US 500 on 15 minutes giving us an inverted hammer, somewhat like an inverted hammer, showing that there's a high chance that there could be a further bearish pressure in the market. Do you understand? Here can give us a further bearish pressure. So what should we be expecting? It means that from this particular resistance, price could likely continue to fall on US 500, and which is we know that prices US 500 is on a bearish trend, right? It's on a bearish trend. So my sell stop is likely going to be at 4341.6. My sell stop for US 500 is going to be at 4341.6. Take profit at 4335.5. Okay, 4341.6 for my sell stop. Take profit at 4335.5. Okay, and then my buy would likely be at 4355.5. My buy will be at 4355.5. Take profit at 4361.8. Okay, my buy will be at 4355.5. Take profit at 4361.8. Okay. Wow, time is a lot behind us. So I want to do indices before 2:30. Can actually be doing currencies during the 2:30 session here. That's fine. That it may not move as much as indices is expected to move. You understand? So US 100, US 2000 now. After the series of fall it has made, it's made like a kind of trying to repent here, but what I will give you, because of the fact that when we talked about 2000 today, actually, when we talked about 2000, I was not actually, I was not too eager in giving a position for US 2000 this morning, because I said that it was around a trap zone. So I was advising people who, except those who already have orders, I was advising people who were waiting for taking a trade on US 2000, advising them to hold on US 2000 for it to show a bit more direction to come out of this dead zone. And then, yeah, now looking at the chart, actually, I remember what I said, and I will not still be giving an entry on US 2000. I will not be giving an entry on US 2000. It's currently around this place where it is. A lot of range has happened here. So that means rejection can happen around here as soon as possible. You understand? So that's my advice for on that actually still stands. My advice on that actually still stands. So maybe because like I said, I'm still going to look at US 100 again, and that's what we're about to do now. You see that 50 period moving average is likely going to be an issue. That 50 period moving average is likely going to be an issue. But candle is not done yet, so of course we cannot fully decide. It's not done yet, so we cannot fully decide. Okay, so what we will do for US 100, what we'll do, the best thing we can do for US 100 is and have it like this. Good. So this is what we are going to do for US 100. You can have your I'll give us a sell stop and I'll give us a buy stop. Okay, I'll give us a sell stop for US 100 and I'll give us a buy stop. Okay, for US 100, for the sell stop, 15,060. 15,060. Okay, you have your sell stop at 15,060.10. No, 15,060.10, and then take profit at 15,040.50. Take your sell stop at 15,060.10. Take profit at 15,040.50. Okay. Then you can have your buy stop. Can have your buy stop at let me see. I want to be sure that that buy stop is in a good spot. Okay, good. So your buy stop could be at 15,120. Can have your buy stop at around 15,120 and take profit at 15,145. Can have your buy stop at 15,120, take profit at 15,145. Okay, the link for the Fibonacci is this class. You understand? So yeah, it will be shared towards the end of the class. It will be shared because the class is still streamed. It's live streaming, you know. So admin will help us. Okay. What else? So let's continue. We've done US 100, we've done US 30, you've done US 500. Let's go to gold. Let's go to gold. Gold is still ranging around the zone where we gave, but you can see this beautiful bearish candle. See this beautiful bearish candle. I feel like it's something we can take advantage of. So I can have my sell stop on gold at 1950. My sell stop can be at 1950. And then my take profit can be at 1947. My sell stop can be at 1950. My take profit can be at 1947.90. My take profit can be at 1947.90. Why my buy stop? My buy stop will remain as the one I gave in the morning. My buy stop will remain as the one I gave in the morning. That's around 1957.80. 1957.80. Take profit at 1960.83. My buy stop will be at 1957.80. Take profit at 1960.83. You understand? Yeah, that's how I'll do it. Then for oil, before we now go into currencies, we're going to go into currencies also. I know that some of these instruments are more volatile once the market starts. Okay, So yes, we were able to take advantage of the sell of oil. We got in late in the morning, but yeah, we're still able to take advantage of some level of sell. Although I expected it to sell as much as 89.30 thereabout, but it didn't get too close to that point. Well, that said, there is still an advantage, or there's still opportunity for gold to actually still fall. You will see that it's giving us this inverted hammer and the confirmation pattern here. So there's still opportunity for it to fall, and we can actually go in early this time around. So I can have my sell stop at 90.25. My sell stop on oil can be around 90.25. Take profit at 89.90. So my sell stop on oil can be at 90.25, 90.25. My sell stop can be at 90.25. Take profit at 89.90. 89.90. Why my buy stop can be at 90.91. My buy stop can be at 90.91. Take profit at 91.17. Take profit at 91.17. 91.17. 91.17. So that's 90.91. Take profit at 91.17. Sell at 90.25. Take profit at 89.90. Okay. Yeah, it's already close to that place. Soon trigger safe. So let's look at currencies. GBP USD. Well, GBP USD has given us this hammer after the fall, and has confirmed it, and it's trading bullish right now. It's just for us remembering the fact that this particular instrument is still so much on a downtrend. There's a lot of bearish pressure on the market, so it's just a matter of us to look out for where we can take advantage of the sell in the market. Let's also try with our Fibonacci. Let's see with our Fibonacci and see where retracement period is. This is on a downtrend, so I'm going to draw my Fibonacci from the high to the low. So GBP USD happens to be around the 38.2 region here. GBP USD happens to be around the 38.2 region here. So this is my advice for GBP USD. My advice for GBP USD is to actually look out for a sell around here. Look out for a sell around here. We can set a sell limit. Set a sell limit at 1.21520. Set a sell limit at 1.21520. Set a sell limit at 1.21520, and do a take profit of around 15 to 20 pips. Sell limit at 1.21520. Take profit of around 15 to 20 pips. So that should be your take profit should be around 1.21320 thereabout. 1.21320 thereabout. Yes. But I hope that it gets there to trigger it. Now, if this candle closes bearish also, GBP USD, if the 1 hour candle closes bearish, then there's a high chance that price is going to continue falling. You understand? There's a high chance that price is going to continue falling. Okay, so in case it does not hit your sell limit and the candle closes bearish, then price is likely going to continue falling. Want to take advantage of that sell. You understand? Okay, so that's for GBP USD. We're looking out for a sell on GBP USD. Let's look out for what about Euro USD. Let's look at Euro USD. Still battling with the 61.81, although it closed above it. Actually closed above it. Let's look at it on the daily time frame. Well, I expect that around this time now, market will likely begin to react to the unemployment claim. Okay. And Euro USD has actually made a lot of bullish. Remember, it's on a downtrend. It's on a downtrend. So it has made a lot of bullish move. and it's possible that it's getting to the point where it begins to return back to its trend. So my advice for Euro USD is to look out for a sell once it pushes, if it gets up to 1.05880. If it gets to 1.05880, we should be looking out for a sell. If it gets to 1.05880, we should be looking out for a sell. Gets to 1.05880, we should be looking out for a sell on Euro USD. You have a verified resistance not too far from that place, so we should consider it actually selling from that point. Get it? Please get it though. So that is for Euro USD. That's for Euro USD. Okay. What else? Let's look at other currencies. Let's look at JPY currencies. Let's look at GBP JPY. Let's look at GBP JPY. Let's look at GBP JPY. Okay, so GBP JPY. Okay, if you look at GBP JPY, you will notice that yeah, thank you too. So okay, I don't think it has gotten to our entry point yet, but I guess that person already took a sell. So that's the whole idea. It's not really about the buy stops or the sell stops, but it's the information. I hope it will help you. I'm confident it will help you, Sha. So for GBP JPY, the same thing we talked about for Euro JPY, where it's been dancing for a while. I think GBP JPY has also been doing the same thing, although Euro JPY zone is worse, let's not lie. But there's still a lot of, from the candlestick patterns that we see on the daily time frame. Look at it. Let's analyze it. Price is at this resistance, and on this resistance, price gave a hanging man. Remember when we're talking about candlestick pattern, we said that when you see a hammer on its support, you're expecting that price will, if a hammer is on its support, you're expecting price to go up. But if a hammer is on a resistance, it's called a hanging man. And so you're expecting price to actually what? You're expecting price to fall. So I expect GBP JPY from here, this is a hanging man. Okay, so this is a bearish pattern. Okay, and then the next day confirmed it by closing bearish. So for GBP JPY, for me, it is still a bearish market for me. Okay, it's a bearish market for me. So the point now is, how long will GBP JPY make this particular buy before it starts falling back down? You understand? I believe it's on a downtrend for me. So if I draw it from here, for instance, so I'm looking out for where I can begin to take sell trades. You understand? I begin to take sell trades. So apart from the fact that I have a proven resistance here, which I believe that if it gets here, it's a very good position for me to take a sell. Apart from that, there's another zone I can expect to look out for a sell from on GBP JPY. Okay, so I'll be looking out for a sell first of all from 182.357. 182.357. That's my sell. My first sell around 182.357. Second, I'll be looking out for a sell at 182.357. I'll be looking out for another sell at 182.770. First sell at 182.357. Another sell at 182.770. I expect it to actually fall. Okay, US 100 has gotten to take profit on the sell. Thank God. Okay, so don't forget GBP USD also. We have that sell stop at 1.21520, right? We expect a sell from there. I expect that to sell from there. Gold just kissed our entry, but it's still on, it's still in place. So let's just watch out for that gold. Let's just watch out. If you still have your gold sell, just hold on. If it comes to take advantage of your buy, then it means that you might likely want to close that sell. I still expect it to fall. I still expect the gold to fall. Then for oil, Oil at 90.25, yeah? It take profit at 89.90. That's still it. That's still the sell stop. The buy stop at 90.91. Take profit at 91.17. Okay. So let's watch that. US 500 has triggered sell, but it's not a take profit, so it's still likely going to keep selling. Still going to keep selling. US 500 is still going to keep selling. That's what I expect. I expect it to keep selling. Okay. What about US 30? US 30 has not really done much, but with the way US 30 has closed in the last 15 minutes as this bearish candle like this, after the gragra of 230 session, I feel like indices market will still likely fall. You understand? I feel like they'll still likely fall. Okay, so we've looked at GBP JPY, looked at let me now see the US 2000. I wasn't too sure about. It's actually falling. US 2000 I wasn't too sure about. It's actually falling, but you know, I was not sure about it, and so I did not take it, or I did not give it. You understand? For me, there's nothing to be ashamed about, or there's nothing to feel bad about it. Though, when a clear signal comes, you will enjoy it. Okay, so do not forget that you are also, especially those trading the indices markets, that because there's still a lot of movement for US 100. Oh, there's still a lot of movement for US 30. There's still a lot of movement for US 500 and all that. But please use your 15. Use your 50 EMA on your 15 period. Use your 50 EMA on your 15 minutes time frame. Once you have two consecutive bearish candles below it, look out for a sell. You understand? Look out for a sell. Okay, that's my advice. That's my advice. Okay. So yes, let's continue. So Euro USD, for Euro USD, we have a sell limit at the top here. We have a sell limit at the top. Okay, we have a sell limit at the top. What else? Even Euro JPY also. Euro JPY that is already approaching this proven resistance. For those who trade Euro JPY, it's approaching this proven resistance. This is a good place for you to look out for a sell from. This place where Euro JPY is approaching is a good place for you to look out for a sell from. So if you're trading Euro JPY, you should be looking out for a sell. Look out for a sell around 158.500. 158.500. Begin to look out for a sell there. Okay, begin to look out for a sell there. Our oil is headed for the buy stop. There's still no. I'm still very convinced that oil will fall. I'm still very convinced. I think we talked about this in the morning. Still very convinced that oil will actually fall. Okay. So guys, please, most importantly, the trades that have hit profit, the ones that are still holding on, you know, what is more important, you know, this profit that for those of us who made profits, congratulations, you know. But this profit we have made is not what will make us rich, Abby. It's not what will make us rich. So because if we begin to make, if we're making profit like this one now, we will still be depending on the market every day. You understand? So, but what will make you rich in the market, you know, maybe what will make you rich in the market is that information. And one day with that information, you'll be able to capture a move that will really help you. You understand? As your confidence begins to increase, as you listen to what we are saying and you're putting into practice, your confidence increases. What will now make you rich is when you are now able to stay in the market to take opportunities, not even pending orders, not buy stop, not sell stop, not all that one, not buy stop, sell stop. Oh, it has triggered. Oh, it has, you understand? Instead of setting a buy stop, imagine the sell stop we used on US 100. Imagine the sell stop we used on, oh, wow, it's still selling. Oh. Imagine the sell stop we used on US 100, using US 100, and price sold out. When we saw it on 1 hour and I saw that the 50-period moving average was there, imagine we had even taken a sell from that place. Those are the kind of profit that actually make you rich. You understand? It's not really depending order depending, but of course you need depending order as you're getting better. But I just need you people to be focused, I need you people not to be satisfied with depending order. You understand? To be able to enter before, and all that. I'm sure that you guys will get better as time goes on. Oh wow, happy life. You're a good guy. Let me not say you're a bad guy. So, but as time goes on, you will now begin to do the things that actually will make you to be rich. You understand? So I'm glad that God helped us to change that direction, because for some of us, if we're still on a buy by that time, it would have been a very big problem. You understand? So continue to practice. Okay, this moving average is 50. Moving average is 50, and it's likely going to be the one that will still push US 100 continuously down. Okay. So yes, thank you all for your time. Yes, we're going to drop the I don't know if admin is here to help me drop the EMA YouTube video. But I'll try and I'll get it. I'll drop it now. I'll drop it now. Oh, wonderful. Admin is here. So we have the YouTube video for the EMA trading strategy. Okay, the EMA trading strategy. So you can use that. Then yes, the Fibonacci is this particular class. So once we are done with the class, you see, once you go to YouTube, even this EMA link, once it takes you to YouTube, that's our YouTube page. You understand? So once you go there, just go to live, click on live, you will see this particular class is there. You understand? So this link that has been dropped, if you click on it, it's our YouTube page. After I finish watching it, just go to live. You will see the one we did this morning. You see the one we did today. You see this particular class we're having now on the Fibonacci. The one we had yesterday on the Fibonacci is there also on the YouTube page. So you can even just subscribe and put on your notification so that anytime we send any material like that, you would have it. Okay. Please, like I said, practice so that you can make more in your market. Okay, you can make more in the market and you can thrive beyond pending orders. Nobody go feed a do shakara for you. Even me, I'll not be able to do shakara for you. I know that I used to do shakara sometimes. So when you learn like this, nobody go feed do shakara for you. Also teach people. I hope you understand that there's a lot of money to be made in this business, even beyond trading. Even beyond trading. The knowledge you guys have, there are a lot of people who don't know about this. You can train them and make money. I train people and they pay me. You understand? There are people who say, oh, I want personal mentorship. 3 weeks, 150,000 naira, they pay. So, and the knowledge, I got it for free from learning from Rally. You understand? So, by the time you learn it for yourself, you teach them, they will pay you. Now you're making money while you're trading, you're making money teaching people. We don't have too much academy of trading academy in Nigeria. So you can set it up, training like a normal jam lesson. You can have trading centers like that, evening classes like that, because of what you know. You can hook up with Rally Trade. We set people up like that. Let us know you want to be a partner. This. You can do that. We let people in on it. You understand? There are other aspects, but they all start from understanding this market, trading and making profit. You understand? So yes, 21 period moving average is still a moving average, just like 50 period. You understand? It's also performed the same use, just that I always advise 50 period for 1 hour. Okay. So yes, this is the much we can take today. You will hear my voice again, God keeping us next week by the special grace of God. Mr. Charles, okay, your 50 average is not the same shape. So it's possible that, so this is what you need to do. If you are sure that you use the 50 period, put your cursor on that 50 period, especially if it's a system, right click, select properties. make sure that the properties you're using 50 period, you're using one shift or zero, it doesn't matter, but one shift if you want it to look exactly like what I am having here. Exponential is the method, and I'm applying to close. I'm applying to close. So let your MA method be exponential. Let your apply to be close. Even on your phone, if you check, if you have this thing for your 50 period moving average to look like my own. Okay. So yeah. Thank you all for your time. This is the much that we can take. Okay, I've got what you sent. So this is the much that I can take. For Euro JPY, I said to do 15 to 20 pips, so you can calculate that. Much you can take. Thank you so much. We will continue again tomorrow by 8 a.m. for the morning market review. Okay, continue again tomorrow 8 a.m. for the morning market review. Okay, so don't forget to join us with this same link. Don't fail to join us, and don't fail to practice. Don't fail to practice. Okay, don't let the pressure of daily profit blind you from taking time to practice. You understand? Practice, not on your real account, of course, but practice breeds perfection. Okay, so yes, thank you so much. Bye for now.